Hi there, I'm David, and I'm once again coming to you on behalf of BeInCrypto. We've talked about decentralized finance on this channel before, and even explored some of the opportunities it affords, such as yield farming. However, today we're going to speak less generally about DeFi and instead focus on 5 different projects that are worth paying attention to in 2021 and almost certainly beyond. Now, before we even get into our picks, we have to say that there are dozens, if not hundreds of projects out there, both established and brand new, that are worth looking at or talking about. We had to keep this video to a reasonable length though, so we tried to pick 5 options that are big enough to merit attention, but also diverse enough that most viewers won't be familiar with all of them. As always, if there's a project you think is worth bringing up, but wasn't included here today, tell us about it, and why we should cover it, down below in the comments. Okay, with all that said, let's get into the 5 DeFi projects that are turning some heads in 2021. First, let's talk Uniswap. Obviously, we've mentioned Uniswap in our videos before. This DEX continues to be one of the biggest players in DeFi, and we briefly explained it in our How to Use Decentralized Exchanges video, so go check that out if you haven't already. However, it's the launch of version 3 that's a major part of why it made it onto this list. Uniswap version 3 was released on May 5th, 2021 and comes with multiple upgrades that put it a cut above the automated market maker it already established itself to be. Some of the key changes include the introduction of concentrated liquidity and a change in how fees are handled. We don't have time to do a deep dive on these topics in this video, but here's what you need to know. Concentrated liquidity means that when providers stake their assets into a liquidity pool, they're no longer providing for the entire range of possible prices from 0 to infinity. Instead, they define a price range that their pool will represent. This means that the trading of their assets, and by extension fee generation, will only occur when the price is in this range. This may sound needlessly complicated, but it actually provides the means for sophisticated users to set more complex liquidity pool positions that, if properly managed, can notably enhance returns on the same amount of capital. In its current form though, yes, the system is geared for those who will be fairly active with their pools, and isn't a great set up and forget platform that some users may want. We should note that undoubtedly right now, new platforms, algorithms, and automated bots are being created that will utilize this system in order to maximize returns without the user needing to understand the underlying concentrated liquidity strategies, but it will take some time for these to launch. Another interesting change is the ability for users to choose one of 3 fee structures when setting up their pool. Basically, fees can be set at 0.05%, 0.3%, or 1%, depending on the level of risk that a user feels they're being exposed to. A simple way to think about it is the lowest fees are best for stablecoin pairs that aren't likely to change much. The highest fees are ideal for risky pairs, like those involving brand new assets coming onto the platform that stand to see high volatility. The middle tier fee is often good for everything in between these extremes, but ultimately the liquidity provider gets to make the final call. It's because of this general attempt at becoming one of the most professional decentralized exchanges out there, and the fact that Uniswap is still one of the largest players in DeFi, that we felt it would be a big miss to not include it on our top 5 list. Moving on, let's look at Yearn Finance, sometimes pronounced Yearn. Yearn is a platform that offers users multiple means to maximize their interest on their cryptocurrency. Like many DeFi platforms, users can put their crypto into a variety of pools, known on Yearn as vaults. On the front end, it's as simple as that, but it's what's going on behind the scenes that allows Yearn to offer better returns than many services. The steps can be a bit technical, but basically, Yearn is moving your crypto between different platforms and pools depending on market conditions in order to maximize your interest. It's essentially automating yield farming techniques like those we've spoken about in our yield farming video. There are single and multi-token vaults, and quite a few ERC20 DeFi assets are supported. This makes Yearn a fantastic one-stop solution for many liquidity providers to get the same types of returns that are often only possible with micromanagement. That all being said, not all assets in DeFi are represented, and the interface, like with many DEXs, isn't exactly self-explanatory, so newcomers may want to do some additional research in order to decide which of Yearn's products are right for them. Next up, Synthetics, which is a decentralized synthetic asset issuance protocol built on Ethereum. These synthetic assets, or synths, are basically financial instruments that take the form of ERC20 tokens that are pegged to actual assets like gold, stocks, of course cryptocurrencies. Really, it can be virtually anything with a market. They're collateralized by the native token, SNX, and by leveraging oracles, they allow for users to have exposure to the price movements of these assets without ever actually having to hold them. Synths are unique from similar products like tokenized commodities. Generally speaking, tokenized commodities require whoever's minting them to be actually holding the relevant asset, and you are then purchasing a decentralized token that represents a fraction of those underlying supplies. This, of course, requires a level of trust and/or auditing to ensure that the issuer is honest in their collateralization. Synthetics negates this situation entirely. The synths are all backed up by SNX itself, and are merely tracking the underlying asset's price. Think of it almost like a stablecoin, which are often pegged to a fiat currency, only synths are pegged to things that themselves can be volatile. There are in fact even synths that track prices inversely, meaning that the synth goes up in value as the commodity it is tracking goes down, and vice versa. This then allows for a form of shorting on the platform, which is currently somewhat uncommon in DeFi. Overall, synthetics may be a great option for those who want to trade cryptocurrencies as well as more traditional commodities, but all from one simple place and without some of the trust issues or complexities normally involved. Now let's look at PancakeSwap. At a glance, PancakeSwap looks a lot like a version of Uniswap, and it is, but there are some essential differences that users should know about. For one, PancakeSwap runs on the Binance Smart Chain, or BSC, not Ethereum. Without getting into a debate around which platform is better, BSC at least has a current edge in terms of speed and fees. That being said, there's other features that could likely attract many towards this choice. Most notably would be the sheer amount of liquidity pool and yield farming options that can be accomplished with limited effort. For example, providing liquidity for a pool earns you LP tokens, as with most DEXs. These LP tokens can then be used to farm Cake, a native asset to the platform. Cake can then be put into special pools, appropriately called syrup pools, that then further generate additional Cake or other assets via interest. This can all be accomplished inside of one interface and with just a few clicks, which is more streamlined than many similar offerings. Lastly, it doesn't hurt that PancakeSwap and Binance Smart Chain dApps in general are actually compatible with MetaMask, though a few steps must be taken to switch networks. Still, this offers a high level of ease and familiarity for those who may be coming over from Ethereum. Finally, we have Polkastarter. Polkastarter is a platform built on top of Polkadot that essentially tries to solve the problem with traditional initial coin offerings. The idea is for this platform to be a place where new projects can quickly raise funds in a direct and transparent way by offering their new assets through the Polkastarter market. Users then, who want to be the first to get exposure to these coins, can get in without the risks of volatility that generally come with most ICOs. Basically, the platform is for managing initial DEX offerings, which are of course possible on other decentralized exchanges, but here they have the added benefit of offering transparent, flat rates for purchasing new tokens. This is accomplished through what is known as fixed swap pools. These pools maintain the price of the new token until the initially offered supply has all been bought. They also offer a high degree of control by those running the project. Sales can be public or private, be flexible enough to allow for a variety of supported payment assets, and the system has full Know Your Customer integration to enable developers the ability to stay in line with regulatory standards in many jurisdictions. Because the whole system is built on top of Polkadot's multi-chain network, transactions are cheap, fast, and can support a variety of blockchains, even cross-chain swaps. This has led to the platform being the chosen launch vehicle for dozens of new assets, and it's looking like it might be just warming up. Okay, before I wrap up, I need to give shoutouts to some honorable mentions that didn't fit on this list. For one, I have to mention Polygon. Not exactly a DeFi platform unto itself, but instead it is effectively a layer 2 solution for the Ethereum network that also allows for interactions with other blockchains. The most important aspect of the network right now is the fact that DeFi exchanges are already popping up that utilize Polygon sidechains. For example, QuickSwap, a literal clone of Uniswap 2.0, does everything that Uniswap and similar platforms do, but for a tiny fraction of the fees that are currently plaguing the Ethereum network. It's true, Ethereum is going to be scaling eventually, but that just means Polygon will continue to be ever more efficient, and this is why we feel this project is definitely one to watch. Our other shout out goes to TonSwap, a next generation DEX that again works like most of the platforms we've covered, but is built on top of the free Ton network. As you may recall, the Ton network was originally going to be launched by Telegram, but was ultimately abandoned. However, it was adopted and resurrected by the community and now acts as a much faster and cheaper alternative to Ethereum. If you can't wait for Ethereum to scale, feel that sidechains are still underdeveloped, and options like the Binance Smart Chain seem too corporate, then maybe TonSwap is just the decentralized exchange for you. By the way, if you're looking to purchase some DeFi assets like Ethereum in order to start getting involved, then maybe consider coming to check out the Stormgain cryptocurrency exchange. Stormgain is not only one of the hottest up-and-coming exchanges out there, it also offers several valuable perks, such as a loyalty program, bonuses for referrals, annual interest on crypto deposits, and using the official app, you can even begin cloud mining cryptocurrency for free today. If you're looking to purchase Ethereum, Bitcoin, stablecoins, or other top cryptocurrencies, then just know that Stormgain offers a little bit more than other exchanges, so be sure to check them out. Okay, we've covered a lot of ground here. You should have enough information to go check out and start using the platforms we just talked about, but again, there are also many more out there. Of course, DeFi is an ever-evolving space, so if you want to keep up on all the latest developments, then come check us out at BeInCrypto.com, where you'll find daily updates, analysis, and more. Also, don't forget about our other content right here on YouTube, such as interviews, educational videos, and our bi-weekly news show. And lastly, if trading is your thing, then come join our trading community on Telegram, where you'll get access to the latest technical analysis from our top traders. As always, thanks to all of you for watching. We'll see you right here again real soon.